Everyone, let's talk about why 98% of people fail at investing and how one SIP can fix it. Systematic investment plan. We're going to learn wealth creation through SIP and focused investing. This will help us building long-term wealth with systematic investment planning and disciplined financial strategies. So what exactly is the wealth building method through systematic investment plan? So let us understand why this is important. First, systematic investment plan is to invest a fixed or a certain amount of money every month from your income. The key is to start early, even if you're starting small, but you need to start. The reason why the SIPs do wonders to make you wealth is it leverages time and consistency to build substantial wealth through SIPs. So you can start your SIP with a small amount. $1,000 if you start at age 24 can grow to around 10 crores by rupees by age 450 at 12% CAGR if left untouched. This shows the power of early investing. Always have the commitment to never stop or withdraw your SIPs. Make a promise to keep yourself invested through SIPs without any pauses or withdrawals to maximize wealth creation over time. Separate your SIPs as a wealth creator. This independence from the other investment will help you create long-term wealth through building assets. Also, as I talked about leveraging time, this is your greatest strength. The earlier you start, the more money you're going to make. We all know law of compounding, which is the eighth wonder of the world, works efficiently well once you give it a time to compound. The more time to compound you give, the exponential money it is going to make for you. So start early, start small, but start now. Now we need to use the power of compounding to our advantage. Let's suppose initial 1 crore takes 10 years. That is, your first crore takes about a decade to accumulate through steady investment. Now, the other crore, which adds up to your first crore, will not take as much as time required. Why? Because now the law of compounding is working for you. You can visualize your SIP as a growing tree. You plant your SIP, nurture it patiently, and let it grow untouched for 10 to 20 years. Use compounding tracker tools with the help of Excel or apps to watch your wealth grow over time. I would recommend you to read a book called Psychology of Money, which will help you gain deeper insight into money and investing psychology. The key is patience. Patience is the key to compounding. Compounding acts as an engine accelerating wealth, and it will consistently pay you off all the way. Now, I'll give you a rule which you can apply in your personal finance journey. This will help you to be more financially disciplined. 50-30-20 rule. Now, what does this rule talk about? 50% of the money which you get, you need to allocate it towards your needs. Needs are the basic essentials which you require. Rent, food, clothes. Then comes your wants. Something that you want in life. Put 30% of money in the wants, which is lifestyle, to have a good, enjoyable weekend, gadgets, travel, etc. In the remaining 20% should go to savings for your SIPs, for emergency funds, for goals. And you need to automate this 20% of the savings through SIPs. And that should start at the start of each month, the time you get your money in your pocket. So this is how you will work with 50, 30, and 20 principle. Also increase your SIPs with income. You need to build wealth, not lifestyle inflation. What happens normally when people get an increment in their salary, they increase their lifestyle spending. Rather, they should increase The investment, this is the biggest mistake which people do. So as your money grows, do not increase your lifestyle spending. Rather, increase your investment towards your SIPs. Grow SIPs proportionally with income increase. Have at least 10 to 15% of annual increment in your monthly SIPs. Avoid lifestyle upgrades that lack any value. Create assets, not liabilities. It's better to invest money in a stock or mutual fund than to buy an expensive mobile phone. You can do the calling anyways in a less expensive mobile phone, and the remaining amount of money you can put that in your SIPs. It could be an increase in annual SIP or a lump sum payment as well. Also, you need to practice delayed gratification for financial discipline. Now, this is a very important concept which you need to teach to your children as well, to cultivate delayed gratification. This will strengthen your ability to save and invest wisely. Once you develop this habit, you will start building sustainable wealth over time. And the next tip is to increase SIPs alongside income to compound wealth. The more income you make, the more money should be invested. This is how you are going to become a wealthy person. Another important factor is to stop timing the market. Be consistent. Rather, so consistent investment beats unpredictable markets highs and lows. You know that stock market and mutual fund is subject to market risk. Stock market fluctuations cannot be accurately forecasted. It is very uncertain. So never pause your SIPs due to market fluctuations or any negative news in the market. Avoid letting short-term news or politics disrupt your disciplined investment for long-term goals. Even if you're getting low returns in a particular year, accept it. Period of low or negative returns are temporary phases. This will get over and you will gain momentum and get positive growth as well. You just need to have patience. We all know that SIP is something which benefits from rupee cost averaging. So the more investors buy units, the prices fall, lowering the average cost. So whenever there is fall in the market, try to buy more stocks. Try to invest more through mutual funds. Why? Because you are getting more units at a less price. So the market dips, the falls allow you to accumulate more of the units at lower prices, improving long-term returns. As I said, consistency will always beat the market. Staying invested steadily outperforms attempts to time unpredictable market movements. There are certain mistakes which I want you to avoid while doing SIP investing. Well, you can download this PPT free of cost in the link that will be provided below. Now, avoid withdrawals. Withdrawing often disrupts the power of compounding and harms your long-term wealth creation. Also, try not to switch funds too often. Why? Because it blocks the consistency of growth. Stay invested to build steady wealth over a period of time. Even small amounts of 1,000 can grow significantly over time. So never underestimate the value. Also, you need to have long-term focus. Prioritize steady long-term investing over chasing risky short-term high returns for better wealth. Do not have more than 3 to 4 funds. Choose mutual funds with 10 to 15 years of performance and consistent managers for reliable growth. Avoid frequent hopping of funds. Long-term commitment to one fund yield better results. Also, you need to focus towards the process than results. Your objective should be to become a disciplined investor and have patience instead of reacting to short-term market swings. This will make you a better investor.